So what I took away from this, to simplify for the audience, is that if you're looking for a short-term goal, then it is better to invest all in one particular stock or one sector. But then if you want long-term investments, then it is more profitable to have a diverse portfolio. So, hello guys, welcome to another episode of Just Another Podcast. On today's episode, we discuss about stocks and we answer everything from the most asked questions to other queries which can be seen online. So today, the host is going to be Swaraj and me, and
Hi,
the two
everybody.
particip and the two people who are going to be sharing their knowledge and experience is Akshay and Rohan.
Hi.
So I would like to start off with the first question, which just states that what are IPOs and how should we invest in them? This is one of the most asked questions online. So, Akshay, I would ask you to start. How would you answer
Yeah.
this?
Now, what are IPOs? IPOs are nothing but the initial public offering. We need money in order to start a business or a company. During a business or a company, they require a lot of money. Let's sum it around 200 crores or something. So you can't go ask the banks for those monies because in order to pay the bank back their EMI, you need to have a profitable business. But the starting, you won't have any profitable business, and you the only way where you can take money is through the public. So IPOs are nothing but they are a way where they're provided a slots. In each slot, there are many shares. It can be around 13,000 to 15,000. And these numbers are given by the brokerage apps. And these apps, they provide a certain number of shares where you can present it. And the companies, which the companies do give a margin of where they need 200 crores. If the only problem during IPO is if a company exceeds that profit or if they exceed that money which they require, then I think that the IPOs will not give you that much of a profitable fund. So the only hope in IPOs is if the money collected by the company is within their margin, then you have a profitable business. That is what IPO is.
Okay, that was a very good
Interesting.
explanation. Yeah.
Good. Go
Swaraj,
on.
do you have any questions?
Yes, I have a question. Uh, this is an open question. Anybody can answer. Which sector do you think will outperform in the coming few years?
So by a sector, or like what would you mean by a sector in this question?
What I mean here is pharmaceutical, tech industries, real estate
Okay,
industries,
like
so on.
that, like that. So yeah, so basically, as you see, the stock market is very volatile. It is so like you never know when. So today, if the stock value of Adani, let's say it's of a company like Adani, is at a low price, tomorrow it might hit an all-time high, which is greater than any other sector. But let's say there is a pharmaceutical company which is of the same caliber. It can go so low that it cannot even imagine. So it always depends on the current trends in the market, the current news, the current affairs which might affect the market. So yeah, it always depends on how you know the environment is affecting the market. It fluctuates completely based on how the users how they utilize it. So let's say a bunch of people, let's say there are 100 people buy the stock today of the pharmaceutical company. So the stock price reaches a new high today. Tomorrow, 200 people buy it. It reaches a greater high. But let's say day after, 500 people sell. That drops lower than how much it was day before yesterday. So it always depends on how the user, utilizes the market. That's all.
Okay, I'm convinced. Nice answer. Thank you. Answer, you can go
Yeah.
ahead.
Yeah. So, my next question is going to be having two parts. The first one is how to identify stocks for investment, which is the backbone of any investment portfolio. And the second part of that question is how much time should you spend researching these stocks? Because
Yes.
what happens in majority of the cases is a user, or let's say an investor, will say that I will start investing in this stock when it reaches an X amount of value, and that perfect time never comes. So the amount of time that he has invested would all be wasted. So what are your thoughts on this?
See, there are many factors which help in these things. I think the main factors which you want to say are the investors. If a small company is backed by a bigger company, of course you want to put or you want to invest your money there. And it can be of any stocks. You have to see their interest rate, the profits that they are giving, and the inflation also. The inflation also is a major part of this. And according to me, an average in India, an annual average of inflation is around 4 to 5%. So today, if it's 100 rupees and the next year that's 105, then yeah, it can be a major this thing. But yeah, these are the factors which you need to see if you want to invest. And according to the analysis part, it depends on the individual. The thing is, if you have more money and if you want to expand your investment to many other companies, then you require a lot of time. Or if you have any ideas, or if you want to go to the major companies which you know will provide any profits or something, then you have a clear vision right there. So I think it all depends on the individual.
Yes. That was well said. And Swaraj, you have any other question?
I wanted to ask, since how long have you been doing stocks?
So personally, me, so I was introduced to the stock market in I think 2 years back by a friend of mine
Oh,
who's right here. Yeah, so yeah, the host. So Ankit, he was the one who introduced me to the stock market. So we started off by doing trading, stock trading, not exactly delivery investing, but yeah, we started off by doing stock trading as a bunch of kids who didn't know what to do. Simply put money up and down. If it goes up, we get money. If it goes down, we lose the money. But yeah, so that was how we started off. It was 2 years back since, but then now slowly gaining experience. It's a different story now.
since you had about 2 years of experience, measuring both if you had 2 years, what are some common mistakes that you've seen other people doing and you've avoided them in your journey so far?
Akshay, would you want to tell something?
See, yes, we all have been there. I think the first time when I opened stocks or something, I was having no idea what to invest or how to invest. And the second issue was I had a minimum rate of money. So I had just 100 rupees. I just wanted to try it out and I just put it at some random stock or something. The next day it increased a bit. I thought, should I return? I mean, should I withdraw it or no? But the thing is, the profit which you get by giving a little less money is maximum as 5 rupees a day. But I don't think uh, you can you have to have a clear vision, you have to analyze it, and you have to know about what you're investing. So I do prefer whoever is investing now to study or to analyze what they want to invest in and then do their investment. Yeah, back to you, Ron.
Yeah. So coming to the common mistakes, well, yeah, as you said, we've all been there. We've made huge mistakes. So the main mistake is never be hasty, never be greedy in the
True.
market. So I've been there. I know what that is. So it's like, let's say you invest 500 bucks. You get lucky. At the beginning, you have no knowledge. You're basically playing on luck. You're playing on luck, and yeah, that's basically it. So as a beginner, or for whoever's watching here, never get greedy. So let's say you invest 500 bucks. You're basically playing with that money. You have no knowledge what you're doing. You play with it and you gamble it and it goes up by how it may go up by 200 bucks also in a minute, which is great. So all I'd say is don't make hasty and then looking at that 200, you'll put in the entire money thinking, oh, if for 500 I made 200, if I for 700 I might make 300, 400. So you might put the entire money without judgment and lose it all. So yeah, that is where greed comes in. That is haste, greed. That is what propels you to do that. So all I'd say is never be greedy. Do your own research, do some study, analyze the market first, play with. There are many websites and platforms which give you dummy money. They don't. You can use, artificial money to first practice, and then you can start off with real money. So yeah, that's what I'd say. First, go ahead with practice, 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 and then put money. Otherwise, just don't do it. Or if you're going to do it, be ready for the loss. That's it.
Well said, Rohan. Yes, Ankit, you can go ahead.
Okay, those were very good points. And yes, I have seen many people make hasty decisions when it comes to trading, but it goes through everyone, and everyone goes through a certain phase. So we're now coming back to the question. This is something that happens to be asked by a lot of beginners. They usually want to know how a stock is priced. So, what are the factors that influence the prices of any stock? Now, I would like to give one example. Let's say the price of Vodafone Idea, which is currently the best network in India, the
Right.
market share price is around 100 rupees per share. And this is what it averages on. Now you have one share worth 100 rupees, and now on the same panel you have MRF shares which are worth 1,30,000 per share. So and now how are they pricing these shares? So what are your points on that?
Yeah. So your question was what factors affect the value of the share, isn't it?
Yes.
So I'd say, see, there are multiple factors, but a few factors that are coming to my head right now is one is the the reputation of the company for sure. So let's say your Vodafone, as you said, which is the best according to you.
Yes.
So so for a company like that, if let's say you have Vodafone, you go and publicize it to 100 people. Vodafone is amazing. Vodafone is amazing. They tend to go and they tend to, buy Vodafone. When they buy Vodafone, they're convinced to buy the shares of Vodafone too. That is one factor which will affect word of mouth. The second factor, the main factor, which is I feel very critical in affecting the stock market, is your is the is the basically the big changes is happening in your country's economy. So let's say you have the best example I can give you is one is the demonetization that happened back in 2020, I think 2019,
Yes.
2020.
Yeah.
So that demonetization completely shattered the stock market. Everything went honkers bonkers. Nothing was in place. So that is one thing. The current affairs in the company. Also coming to other things, it comes to it also comes down to the your country elections too. So in India, talking about India, we had our general elections, I think of a month or two back, last month in June 4th was our general election. That day the stock market, it crashed, it went down. A friend of mine, I'll give you an example. A friend of mine, he had put, I think he'd invested a 2,000 rupees, and he was doing, I think, intraday trading. Yeah, he was doing intraday, and yeah, he gained, I think, 8,000 return on that because of the way stock market behaved. So yeah, the factors that affect the volatility of a stock market are completely influenced by the current affairs in the news and everything. Yeah.
Yes. Those are very valid points. And I would also like to add one more uh, problem which recently occurred. If you guys remember the LIC stock which was given out when they
Yeah.
created that IPO, it was a government IPO. And the main problem was that they said that due to politics, they had purposefully lowballed the value of that share, saying that it was supposed to be worth a lot more. So when people heard this news, they all immediately invested in it, thinking that it'll give a very high return. But it immediately went down that exact week. It was a very bad day for all the investors who invested in it. So, do you think that the general public should stay away from government-induced shares, especially because there might be a lot of politics behind that the public might not know about?
See, what I think is, I don't think it's a bad idea to invest in any government official this thing. See, the only it can be a black day. It can be an unlucky day to all the investors. We know that as an investor, I mean, it cannot be that each and every day you find any profit. I don't think that's true, and it will be very difficult. If you have gained 40,000 rupees, you would have lost almost 10 or 20,000 easily. So that day would have been a very unexpected day. That would have been due to many circumstances, but that shouldn't be a factor where you should stop investing on any public. Uh, yeah, that's my opinion.
That was very good. And Suraj, do you have any questions?
Uh, when Rohan was answering your question, he mentioned a word called intraday. I just wanted to know at least a little bit in depth on what uh, it actually means and what the other term means, which is the long-term investments. What are the differences between the two?
Yeah, well, coming to that, I'm really happy you noticed that, and I wanted to go into depth about that, but I thought it wasn't relevant at that moment. But yeah, so there are two types of trading. Okay, trading comes under two types. One is delivery trading. That is basically what is delivery is basically like, let's say you have, it is equity trading. All this, everything, stock trading, everything comes under equity. So let us say you have, for example, you buy a stock today. That stock gets stored in your portfolio and it remains in your portfolio account till you can sell it. Once you buy it, your only option is to sell it. And you can only buy the stock for the price it is priced at. Like, let us say the stock is priced at 200 rupees and you want to buy 10 stocks, that is roughly 2000 rupees. Your capital investment should be 2000 to buy those stocks. So that is what delivery trading is. And once you buy those stocks, you can sell them. That stock is your property now. You're basically a shareholder of that company and you can sell it whenever. You can hold it for maybe 15, 20 years, or even your great grandchildren can sell it. You can hold it till whenever you want. That is delivery trading. Now coming to your intraday. What do you understand by intraday? It means within the period of the day. So the stock market, it opens at 9:15 in the morning and it closes at 3:30 in the evening. So what intraday means is you're trading whatever your margin is, it stays within that time period. You have to buy the stock at the beginning of the day and sell the stock before the day ends. Otherwise, the stockbroker himself will sell it for you. And I'll tell you one very advantageous thing. It can be an advantage and a disadvantage at the same time. You get a five times margin, you get a five times increase in the margin. So let us say, as I said, in delivery, when you want to buy a stock for 2000 rupees, your capital should be 2000 rupees. But in intraday, you can invest, let's say, what is 2000 divided by 5? It is roughly, it is 400 rupees. So
Yes.
yeah, so your capital investment can be 400, but you can buy the stocks worth of 2000. It gives you
Okay.
a margin of five times increase, which is basically low capital trading. Let us say you can afford to buy only shares worth 500, but you also want to play with a big market. So that is when you can approach intraday trading.
Okay.
Yeah,
Yeah,
that is something.
I will also like to add something. In intraday, there is brokerage, and in investment, there is no tax if you are doing it on a longer run. And intraday is where you there is high amount of risk and there is high amount of profits. But in an investment, I don't think there is high profit. I mean, there is actually high profit on a longer, but the thing is you won't find that satisfaction during an intraday. But the intraday, you can lose money easily also. Intraday is said to be a gambling. It's, I mean, just like a gambling, but I don't think, if you analyze it properly, intraday can be much more helpful. Each and every day earning 5,000, I think, is better than taking the money for a longer run. Uh, yeah, earning 5,000 a day is something each one dreams about, and it's something which is good. So I do prefer intraday more than investment, but investment also plays a major role. It shouldn't be ignored. Now looking at the MRF price, it started at something 700 rupees during 2000s, early 2000s, and now it's almost above 1 lakh. So look
Oh,
at the difference. If you had just taken 10 stocks at 2000s, and now you had would have more than a crore, or a 10, I mean, more than a lakh or something. So it is very helpful. That's what I.
Right, that's actually very valid.
Pretty good, pretty good. I'm kind of convinced. Yeah, Ankit, you can go ahead. Yes.
Yes, that was a very interesting topic. So now there is one other question which I would like to ask, and which I'm generally curious. So as a beginner, is it better to have a diverse portfolio consisting of many companies in different sectors? For example, I would like to take this example in COVID when constructions and especially manufacturing the items like cement and all became very difficult. And this was the time when Tata Steel, the share, went on a boom and it nearly had a 300% increase in their entire year. And they made a lot of money, especially Tata Steel and a few other companies which deal with construction also had a huge increase. Do you think, looking at the scenario, it is better to invest all your money into one sector or to have a diverse portfolio? What would you prefer?
Well, personally, I, I don't, I'm talking about myself personally.
Yes.
So I generally tend to I generally tend to keep one goal for the day. I don't do long-term trading. I just do for intraday. So
Okay.
I tend to look at, one stock at a time. So let us say I'm analyzing one stock. I completely put all my analysis onto that, and I play with yeah, I'd like to say I play with that stock at the day. And then now let us say that stock I put my money into it and it is not behaving the way I want it to behave. Let us say I want it to go up, but it is, defying my analysis and it's going down. That is when I sell it back, I get it out of my portfolio and I look for another stock at that time. That is when I look
Hmm.
for. So this is good for short-term trading for what I am doing. But if you are doing long term, you're looking for long term results, then I think you should keep a diverse portfolio because you never know how one market is going to act in 10 years. So you'd rather, lower the risk by putting your money into different places, which let's say you think of one company, it's going to grow, but that doesn't grow. But let's say with the same analysis, you put money to 10 companies which you think will grow. If one doesn't grow, two doesn't grow, three doesn't grow, seven, eight, nine, seven others will grow. So yeah, so you can always put that into diverse things. But yeah, for short term, I suggest focus on one.
Okay. That was a nice way of looking at it. Akshay,
Yeah.
do you have any points on this?
Mm, yeah, actually, what he told is absolutely correct. Having many diverse stocks, for example, you have a stock in technology, you have a stock in consumer products, you have a stock in other deliveries like food deliveries companies or something. During those times, if one stock value goes down and if the other stock goes up, then you are recovering that loss right there. So I do prefer to have a diverse this thing investment for a better profit.
Uh, Very good. So, what I took away from this, to simplify for the audience, is that if you're looking for a short-term goal, then it is better to invest all in one particular stock or one sector. But then, if you want long-term investments, then it is more profitable to have a diverse portfolio. It is also more secure
Exactly.
that way.
Exactly.
So, Swaraj, would you like to ask any questions?
Yes. You guys mentioned that you guys do a lot of stocks and all that, right? So I just wanted to understand what are some key factors that you look into a stock while analyzing the particular stock? Because sometimes it gets
Okay.
really difficult to understand which stock performs well or not beforehand, right? So what are those particular or specific key factors that you look into?
Yeah, so first I'd like to say I think Akshay will also have many factors how he analyzes it. But yeah, first when I say how I analyze it, see, basically the process of how you analyze it is called trend analysis. All right. So how the market is behaving right now. So like what is the trend of the market, whether it is an uptrend or a downtrend or it's a dead market. Like there's no trend at all. So yeah, I personally, I there are on every stockbroker site or on the app you use where you want to buy and sell stocks, it always comes with a bunch of indicators. What you have to do is do your research, do your study on how to use those indicators and how those indicators will help you analyze how your stock is going to behave. So yeah, so to give you one example, so there is one indicator which I use a lot. It is called the WMA or SMA. There are two, VMA and SMA. I'm sorry, VMA and SMA. Okay, so those are two graphs which you use to notice whether your stock is breaking the support and resistance or whether it is confined to the support and resistance. If it is confined within that, it can always be unpredictable. Okay, you will never know how it is going to behave because in between that resistance line, it can either come down, go up, come down, go up, which is very risky for you to play at that time. But also when it there is a certain margin, when it crosses that margin in the SMA line, that is when you know for sure your money you can put your money into it. But that comes with a slight risk too. But your risk is shortened when you invest at that point in time. That is how I go through it.
Yes,
Mm.
clearly explained. Akshay,
See,
if you have some points.
yeah, I do. The thing is, during this analysis, you see the wave or the candlesticks, how they go. You see, 1 day, 1 week, 5 years, something. There are two types where you can. There are just two types. There is called bullish and bearish. Bullish is nothing but if the graph is going up, and bearish is nothing but if the graph is coming down. So you analyze and each and everything. There's a pattern. When the stock goes up and down, there's a series of numbers. It takes 6 to 7 times. And then after that pattern, the trend changes. It may either go up or it may go down. So you have to look at those factors also, and those also play a very important role.
Yes, valid points, really good points. Ankit,
Yeah. So what I heard from you guys currently, when it comes to investing, is that you mentioned that you have to have a good portfolio when you invest in one particular company and respectively. Now, I have this question. Is it better to invest money in small caps, which are basically companies which have just started out within 5 years, and their IPOs aren't that expensive, and they come with a fair price? I think averages around 60 to 100 rupees. Is it more profitable to invest in that or a blue chip company? Let's say a big MNC like IBM or Dell. So now the general idea is you can invest, let's say 10,000 in smaller companies and gain a huge profit if they do well. But you invest that same money in a blue chip stock and it will not show you a very good return because at the end of the day, you're going for a more secure way. Now, what would you prefer? Would you go for a smaller company or a MNC to invest?
So when you ask this question, I want to cross check with you whether you're talking about short-term returns or long-term returns.
Let's take the long term example for this scenario.
Okay, if you're going long-term, then I think you should have a pretty good capital. Let your capital invest. See, the thing is, if you're looking for a long-term goal, your capital investment should be high. I have no this thing in that, but your capital investment should be high. If you're looking for a good long-term profit of, let's say, 10 years down the line, you want to have a profit of 10 lakhs, 15 lakhs, 10 crores, 15 crores, then your capital should be high. With a low capital, you're not going big anywhere. Okay, that is one thing. Second thing is, as you said, so would you want to invest in big companies? Yeah. So for long term, I would always prefer big companies because the fluctuations they will have will always be it'll always be predictable because they are big companies. Whatever happens in the government, whatever happens in the country affects that. But let's say you're a new startup, it is very risky to place your money in that at the moment if you're looking for long term. Okay, always I mention long term. So long term, always go for the big companies, big MNCs. They're always the go-to. But the same thing, I just like to add, if you're going for short term, that also comes whether you have a good capital or not. So if you have a good capital, you can for short term intraday. What I do, you can do that. You can add money to big companies. But You can also add to small companies. When I say small companies, let's say you put your money into a company which has a stock price. So recently I was looking at the company. It's called, I forgot what it's called, but it had a stock price of 20 rupees. So let us say I had an investment of 5,000. I could have bought 5,000 divided by 20. That is roughly around, yeah, let's say, yeah, around 2.5K. I could have bought 2,500 stocks. So let's say that those 2,500 stocks, if they had even a 10 rupee raise that day, 10 into 2,500, that is, I would have had a profit of 25,000 that day. So it always depends on your quantity. But when you're going for long term, quality. That's what I say.
Yeah. Those were very good points. And so, Swaraj, you want to have any questions?
Uh, this is the last question for this podcast, and the question is pretty straightforward. Uh, how do you guys stay informed about the latest trends of the market right now? Like, what are the sources that you go behind?
So Akshay, you want to go first and then I'll go?
Yeah, what again? It also the same factors as before. You analyze what you do or what the stock is there for. I mean, like yesterday, 1 week, or 5 years, and then you also check the investors. The same thing as the previous thing. You need to check the investors. You need to check the capital. You need to check their events and what the company plans to do. So these factors play a major role and they help us to provide a big profit. If a company they have a good capital, they are economically good. At that time, you see that you are more attracted to purchase their stocks and you want to invest in them. So there are many factors, and in the latest trends, I think now AI is a very important trend. So I think investing in those companies will play a major role. That is what I believe. Rohan.
So yeah. So as you said, how do we stay informed? So yeah, as I said, that's only one thing that influences the stock market. That is the citizens of the country, the government of the country. So all you have to do is stay informed, read the newspaper, read news on online, stay like keep note of what current affairs are, like whether how the government is working right now, whether it is in favor of whether let's say you want to invest in a company, whether the way the government is behaving, whether it is in favor of the company or it is against the company. Or look at how the company's competitor, like always do research about the company's competitor. If you have a company, there is always a competitor company to that. So always look at how that competitor company is how it is performing. If it is performing very well, that is going very well, this will this will go down. If this is performing very well, that will go down. So yeah, always the news and do your research. That is all.
Yes. Oh, very well said, both of you. Uh, I think with this meeting that we've had so far, I think the audience can at least very confidently understand where to start off their investment journey. And hopefully everything is clear. And a big thank you to guests and a big thank you to Ankit as well for hosting this. And yes, I hope you guys have enjoyed this session. Thank you, one and all present here and the audience. And we will see you once again on the next podcast. And take care. And also, don't forget to leave a like, subscribe, and comment. And bye bye, everybody.
Bye.
Bye bye.